Ladies and gentlemen, Greg Magloski for ForexLive.com. Today's date is December 19th, 2022. We're heading into the holiday season. Last night at sunset, Hanukkah started, and on a week from Sunday, this coming Sunday, we're going to have Christmas, and then a week after that, we're going to have the New Year. So a lot of the economic data is out and away. We had the central banks all come in last week, although we have the Bank of Japan this week. But a lot of central banks came in last week. Swiss National Bank, Bank of England, ECB, Federal Reserve, all of them raised by 50 basis points, with their own little stories to go along with it. The Fed was more hawkish, as was the Bank of or the ECB. The Bank of England showed some disparity as far as expectations as far as rates go. So we'll see how it all plays out. What we do know is that the Federal Reserve raised their target terminal rate to 5.1%. That was higher than what the market expected. The ECB also said that they would raise rates by 50 basis points probably this week, month, and next meeting as well. They had a lot of dissenters. 1/3 of the ECB members were looking for 75 basis points. Christine Lagarde said, we'll give you 50 and we'll see how it goes from there, which probably means 350s still on the table. Again, we'll see how that plays out. But and was also more hawkish during her press conference. So all that sort of weighed in the currency markets. In the equity markets, saw weaker equity markets last week. We're off to a little bit better start this week, just modest gains in the equity markets as we head into the opening. So let's take a look at some of the currency pairs here from a technical perspective and see where we stand in regard to what those technicals are saying. We'll start off taking a look at the euro versus US dollar, and as you can see on the interest rate decision day, we did see the euro versus US dollar move to the upside and then rotate all the way back to the downside here. Here we saw the 100-hour moving average hold support here, and we also saw this swing area. These were the December highs in between these levels here, between the 1.0584 and 1.0594 level. That was broken on this day right here, and then we came down, retested that area, also tested the 100-hour moving average, and found support buyers. We tried to hold support here on Thursday, but rotated back to the downside and stayed below that level into Friday's trade. We did end up moving higher in trading here today and moved above the 100-hour moving average, which buyers had their shot to take the price higher. But as you can see over the last few hours in the London morning session, we started to move back below the 100-hour moving average, moving back toward this swing area here, which again was the December highs, old December highs. And we will see how all that plays out. By the way, on Friday's trade and into early trade this week, we did try to find support against that level, but against the swing area, but also against the 50% midpoint of the December trading range. This is the December low right through here, the December high right through here. So the 50% retracement did do a good job of holding support and trading here today. So not only do we have the swing area, we have the 50% retracement, and then this green line, which represents the 200-hour moving average right there, sitting on the 50% retracement. So 200-hour moving average, 50% retracement. That's always a sort of a key barometer for buyers and sellers. Stay above is more bullish, move below is more bearish. So that's how we're going to play the downside this week. If the market price can get below those levels, that would be more bearish. The barometer turn more to the downside. Conversely, if the price is able to get back above the 100-hour moving average, blue line right here, and instead of having this failure stay above that level, that would be more bullish. So we're in between those two moving averages, and the market's kind of make up its mind which way it wants to go, and also other technical levels in play as well. So here for the euro versus US dollar. So that's how I see the euro versus US dollar. Let's take a look at the dollar versus yen. And like the euro versus US dollar, we did come down and move into this swing area through here, where we had a number of different swing lows and swing highs in period over the month of December. Now, admittedly, we did have some failed breaks. I'm looking at like right here above that level, right here above this level. We had a little problem up here through here, but for the most part, this level dissected the bullish above, bearish below type of market activity. and that's where the market came down and trading here today and is finding some support buyers against that swing area. Also, this green line right there through here represents the 200-day moving average, the overlay of the 200-day moving average. So I'm not surprised that we not only found support against the swing area, but also found support against the 200-day moving average, and we're seeing a bounce, a rotation back to the upside in the London session, the early New York session. That has now taken the price back above the other blue and green lines through here that represent the 100-hour moving average and the 200-hour moving average. So a little bit, so found support against key support down here, swing area, 200-day moving average. 200-day moving average, now moving back above the 100 and 200-hour moving average, given the bias a little bit more positive. We do have interest rates higher in the U.S. We also seeing stock markets which are, well, looking like opening up a near close level. So not necessarily a dollar flight into the U.S. dollar from that perspective, but interest rates are a little bit higher here. That's pushing the yield up and also the dollar versus yen to the upside. So watch 100, 200-hour moving average. That's going to be a barometer for intraday trading. If we stay above, it's more bullish. If we move below, it's more bearish. On the top side, we do have this swing area up here between the 137.48 and 137.85 level. Like the little moves through here, we did move above the swing area, a little bit above there and a little bit above here before rotating back to the downside. The buyers had their shot above the 50% retracement of the 2000, well, the range down from the November high here to the low that we saw in early December. So buyers had their shot through here on Thursday's trade, couldn't sustain the momentum and rotated back to the downside and stay below that level. So on the top side with this swing area would be a key target into the early trading week. Let's take a look at the sterling versus US dollar. This is the daily chart, and what is significant off of this daily chart, similar to what we saw in the dollar versus yen, is coming down to a key daily moving average, and like the dollar versus yen, which was bouncing off the 200-day moving average, so is the sterling versus US dollar. We moved above it in the month of December and stayed above it for the most part, and came back down to it on Friday's trade, and found early support buyers against that level, and we're seeing buyers still leaning against the level and trading here today. On the top side here, this swing area between 122.78 and 123.43 was tested here, moved above it here on its way to the 61.8% retracement at the highs last week before rotating down to the downside. So this swing area in the 61.8% retracement will be targets on the top side here for the sterling versus US dollar trading this week. Let's take a look at the hourly chart to get an idea about what this looks like on that chart. And as you can see, the low price that we saw in Friday's trade came down. Really up and down price action on Friday, but the price did come down toward the 200-day moving average. That moving average is still moving to the downside, by the way, so it's moving further away. But we did find support buyers against that level. And in trading here today, we saw the ups and downs here with the high price stalling ahead of the 200-hour moving average. So similar to what we saw here against the 200-day moving average, a little bit of space between that, a little bit of space between the 200-hour moving average at the top side. Ultimately, if the price is going to go higher, we need to get above the 200 and 100-hour moving averages, and if the price is going lower, we need to get below the 200-day moving average. So this is the range here, and as you can see, we're in the middle, pretty much right in the middle between those two levels. If this is the high target to get through, we're right in between those levels. So flip your coin, bet red or black. What do you want to do? Maybe this level right here at the 120-153 level would be a bias defining level for traders to kind of hang a hat on it from a technical perspective. Stay above it is more bullish, move below it is more bearish. Right now we just held that level. This level was a low, well, it's a low price through here. It's also a low price here. And here, we went a little bit above and below it through here, but reestablished the support against the level. So, I don't know, it's something to lean against. We'll see how that plays out for that currency pair. Let's take a look at the dollar versus Swiss franc, and I'm going to focus here on the hourly chart. Why? Because the price is trading below. It's a 200-hour moving average above and the 100-hour moving average below. We also had this old trend line that the market came down and tested through here when we just had the sellers had the opportunity to break below the 100-hour moving average, take the price lower, couldn't do it. Rotated back to the upside. As you can see, we're testing the 200-hour moving average on the top side early in the session, and late on Friday, the price moved back above the 200-hour moving average, or moved above the 200-hour moving average, not back above, because we hadn't been above the 200-hour moving average since early in December, right through here. So buyers had the shot early on. They couldn't do it. Then they started to trade in between those two moving averages. We have this swing area through here as well, which is giving sellers some opportunity to lean against that level. So get above the 0.93265 and stay above is more bullish for the dollar versus Swiss. Absent that, and we rotate back to the downside for this currency pair. We'll take a look at the dollar versus Canada, and this too on the hourly chart buyers had their shot, moving to the upside, getting above the topside trend line, going up and actually moving above the high price that we saw through here. Couldn't sustain the momentum, move back down below it, and in trading here today, we failed on the first move back above the moving average here and rotated back to the downside. Like other currency pairs, we are finding some support against some moving average levels. In this case, the 200-hour moving average 136.21, the 100-hour moving average 136.08. Those are going to be our barometers in the short term this week. If we're able to stay above it, it's more bullish, and we start to look back toward our highs. If we move below it, then we're going to start to look back to the downside here, including this swing area through here on the downside. So that's how the dollar versus Canada is looking. The Aussie versus U.S. dollar on the hourly chart. We came down toward the 100-day moving average. I put it on the daily chart here to show you what it looks like. Here's a 100-day moving average. You can see for most of December, we dip below it through here, but for the most part, which traded above that level and also below the 200-day moving average on the top side. So those two moving averages are key going forward, and we're trading more toward the downside or the bottom side of that range. We also have this swing area on the daily chart, which is in play through here, where the market was more bullish above and then bearish below. At the end of November, we moved up. We stalled against that, moving above and moving toward the 200-day moving average. So this area right through here between 0.6641 and 0.66782, inclusive of the 100-day moving average at 6.5 level, is going to be a key support here for the Aussie versus US dollar. And so far, we're seeing dip buyers leaning against that level. If we get above the 38.2% retracement at 0.6739, that would be a little bit more bullish here for that currency pair. Taking a look at the hourly chart, just briefly, we are below the 100 and 200-hour moving averages on the top side, and below the swing area, which has a number of different levels through here that the market seemed to pay attention to. So watch this area through here as a short-term target ahead of the 200 and 100-hour moving average, 67.38 to 67.43. As you can see, we moved up toward it, could not get above it in trading here today, nor on Friday. So the sellers are trying to put a lid on it through here, but by the same token, we have some support against the 100-day moving average on the downside. So let's take a look at the New Zealand versus U.S. dollar. Finally, to complete our cycle of all the currency pairs at the start of the trading week. And what we see here from a technical perspective is the 100 and 200-hour moving averages becoming our barometer here on the top side. As long as the price can remain below those levels, the bias remains more to the downside. If we trade and stay below it like we did through here, then the sellers remain more in control on the downside. The low price from Thursday's trade came toward our low, the last low through here where the buyers bounced the price, moved higher. It also was a low price through here. So we're going to be watching this level on the downside near the 63.25 level, just below that, the 18 level low from. But the overall, the sellers remain more in control below the 100 and 200-hour moving averages. So there you have a look at some of the major currencies as you head into the new trading week. Get yourself acclimated with the levels that are in play. Understand that we are in a holiday week, so it's going to be a holiday week. So this week and next week. So be aware for that. Could mean more up and down volatility. So pick your points. Be patient. If you don't feel like trading, just do some research into early next week or into the early new year. And get you yourself ready for the new trading year. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.